Yo, what up everyone? In this video, I want to recap the past few days this week, some trades that I took, some trades that we took in my Discord community. I usually do these recap videos exclusively for members of the Investor Trade community, but there's some really good lessons in here that we could use to better prepare ourselves for future trades. I'm also going to break down some key points that I'm confident are going to help you all out. But before we do get into it, I'm going to link my Instagram in the description below. It's a very good resource at Trade. I post daily trading recaps on here, along with very good trading tips and tricks that you're really not going to find anywhere else. The link to this is in the description below. It's a good resource, and you're definitely missing out if you're not following it. But now let's get right into the lesson. I want to go over the ES and NQ action, S&P 500 and NASDAQ 100, the action from Thursday, because this relates to a lesson that I call developing a deep relationship with price and volume. If you can develop this relationship and read the context and watch price facilitate trade, it is a very serious edge if you have the focus and the determination to understand the participation backing the market. So I first want to go over NQ. This was from the pre-market plan. I said we're setting up for a move. We have a key supply imbalance above that could be a burden to higher prices if sellers step in at the 15670.75 and 15676.5, where I may be a seller for a quick scalp. We also had demand a little lower that I really wasn't a fan of if lower prices wanted to be explored. Now, what I mean by developing a deep relationship with price and volume, let's just break down the first 15 minutes of market open. You aren't going to be able to see this really besides the candles that closed. But if you're watching price develop in real time and the candles paint the picture, as a trader, you can react and try to see what that picture is getting portrayed as before it's actually painted, if that makes sense. So the first 15 minutes, we did have the supply zone. There really wasn't a seller or any type of selling confirmation that I tend to look for. In the first 15 minutes, we just hit supply. We moved back down. It was consolidating. Buyers were holding it up. Sellers were bringing it down. It was more of balance and agreement on price at this point. Now in the next candle, we got a quick push up. On a 5-minute chart, the only thing you're going to see is a candle with an upper wick. But if you look on a 1 minute, you're going to be able to see a little bit better. It's still very hard to portray. But you see this nice little upper wick right here at 9:45 Eastern at supply. It once looked like this, and we have heavy volume. So when I interpret this here, I talk about this in the course. I tell members this all the time. It's very important to see some type of responsiveness from either participant when you're trading at an imbalance, because that gives you an edge and that gives you somewhat of confirmation if you're looking to take a trade, especially on reversal at a supply or demand zone. So we were consolidating, and then at 9:45 we got this push up. At one point, this was a very large green aggressive candle testing the high a day inside a supply with heavy volume building. Now, if you are watching the candles paint the picture in relationship with volatility and volume as the bell closes, you would have seen the market moved up, and immediately as soon as we broke high a day inside of a supply zone, there was like a very passive seller sitting there absorbing all the buy orders, and we can validate this solely from the volume, indicating traders were looking to long a breakout to the upside, while there was a passive seller sitting here above the high. And if you're watching price develop, we came up, and it was like someone was here at the high swinging a baseball bat at you. What are you going to do if someone starts swinging a bat at you? You're going to start ducking, and you're going to move away. It's the same thing with the market. We moved up, seller was at the top swinging a baseball bat, and immediately they showed some type of responsiveness. That is an immediate red flag to the downside or to the upside if you are a bull. So I said this. At 9:41, we're having trouble at supply. Anybody see that responsive seller here at NQ? Red flag for bulls, in my opinion. Unless we could go test the 15674. Back above it, bulls are good. Now, where I came up with that level was, if you're watching the orders hit the tape, at that point, there were some aggressive buyers hitting around the 7.5 area or 7.4 area, 15674. So now we had buyers factored in, got absorbed by that seller up there. Now, if this was a true seller absorbing orders and it wasn't someone just front running the bid, then I would have liked more action to hit the bid above 15675, 15674, indicating that this is just a seller spoofing the market to come lower, and they were just on the opposite side on the bid, absorbing orders from the sellers that were getting scared from this move. So it's to be determined. It's where context comes into. But that was the first red flag, and that could have been valid confirmation for you to take QQQ puts. I know tons of traders did take QQQ puts at this point, just learning from that simple lesson of responsiveness that I do go over in the course about reading volume and volatility. So then we started selling off. We didn't really have demand. We had demand somewhat in this area. I wasn't a fan of it because it really wasn't the strongest effort from buyers in bringing us up. But we did sell off, and at this point, we really have nothing stopping us from the lower demand zone. And it could have been a good area for you to take profit, but because of the context earlier in the day, yes, you could have got a couple of points out of this NQ rally. And yes, it could have worked maybe long at demand, lower high, or excuse me, higher low, maybe selling at VWAP. Yeah, you could have got a couple points. It's all about the perspective and the timing of your trade and the perspective of the type of setup you're looking to enter. It really depends. If you're a trend trader, you would have got a couple points off the bone here. If you're a scalper, this would have been an excellent trade. So it's very important for you to understand the type of setup. In my opinion, it's much easier to scalp in this market for fast moves because there has been a lack of follow through with such balanced markets. But eventually, another sign of weakness was the effort from buyers. Yes, we put in a higher low at this demand zone, and yes, we moved higher. But there really wasn't a clean effort. You could also look at this as somewhat of a makeshift supply zone when we sold off earlier and somewhat rejected it here. But I didn't take a trade off this. This was kind of mixed signals. Yes, we sold off. Yes, we invalidated demand. There really wasn't any signs of buying. Could have had another nice opportunity to scalp it to the downside. But there were little mixed signals because of ES. Now, I go to this ES chart, and I actually took a trade on ES today, and I wish I took NQ instead because NQ was the big winner. It just was, I traded ES. So let me pull up the pre-market plan. I'll go up here. ES SPY opened to both sides today. Very strong downtrend line confluent with supply. This is going to be a very key imbalance. If sellers put pressure on here, I'm going to look to scalp SPY puts. We also had demand a little lower to the downside, just like NQ in this area right here. But I wasn't a fan of it because this move up kind of got stopped short and there really wasn't effort from buyers. The market comes down to effort versus reward. The same thing with ES here. So we came into the supply zone. And at this point, I saw some heavy selling pressure volume come through right here. And I took SPY puts at this candle right here, 943. My stop for this trade, which is a mistake, and I kind of want to look back and reflect on it for future trades because I don't want to make this mistake, although it did work out. My stop should have been the high or the high of the supply zone, but I had a little wider of a stop loss at 4545. Just because I wanted to give this a little breathing room, because I would have guessed or speculated that a break above all-time high, you would have had a bunch of traders chasing it. So when I saw that responsiveness on NQ, we also seen the same amount on ES, but not to the same velocity. So that kind of kept me in the position. I had my finger on the trigger ready to stop out, but I saw that, and I saw that on NQ, and it kind of kept me in this trade. Eventually, we started moving back down. I said to members that I'm going to keep this supply valid just because of the responsiveness that we saw near the high. It was like someone was just there with a brick wall. We couldn't get through it. And at this point, we started selling off. It was a quick 20% return. There's really nothing to it. Honestly, if I do this again, it might backfire on me, so I'm not very proud with the execution. But we were consolidating right above VWAP. If you're watching price develop at this point, if I'm a seller, which I was a seller at this point, but let's just act like I'm a seller near the high. If we start moving down and the next 30 minutes or so, we start consolidating and we don't keep putting pressure or show effort to the downside, what's going to happen? You're going to stop out and you're going to get out of your position. You're going to cover and somewhat we could see some upside movement, especially when we cover if we're a large seller near the highs. That's exactly what happened. I saw that consolidation. I just got out of the trade for a quick 20%. I think it was like 19%. So nothing crazy with that. I wanted more downside, especially with how NQ had that crazy downside. Well, it's like I said, I wish I traded this, but instead I was in SPY because that would have been a sick trade. Then we were consolidating. Now, looking back at the chart after the fact, I see a nice downtrend line. This could have been your confirmation to take short again once we maybe broke below the trend line. And what I also like here is we retested this zone. So retests are extremely key because if we break below a trend or we break above resistance or below support, if we come back to test it and it flips the switch, it acts as resistance, acts as support, that could also be a burden to prices moving higher or lower. And that could give us a low risk setup, especially when you add context and especially when you add supply demand zones, because this eventually back tested it and had a nice end of day sell off going into the close. And why I like trading SPY and QQQ options is because they're extremely liquid. They're very cheap, so you could get a lot quantity of them. And when there's volume and volatility on the underlying, we get crazy moves. For example, if we shorted this NQ, if we played puts at this NQ supply zone, the contracts were about 68 cents. So it's going to cost you $680 for every 10 contracts. 30 minutes later, we could have sold from $680 to $1,200. That's a 76% return in 30 or so minutes. If we sold by end of day, these went to like 175%. So pretty crazy moves. If you respect your stop, you follow your plan, and you trade like a robot, they are very possible and they happen in very short time intervals, especially when we get crazy range days and directional days up or down. Briefly want to get into this ROKU trade. This is why it's very important for you to plan and execute when that plan triggers and be able to react. No one can predict what's going to happen next in the market. Instead, we have to plan out, execute, and react. So we've been watching this for the past 2 weeks. It finally came to life on Wednesday, September 1st. It was bouncing off the 340.89 demand. We were flagging, consolidating for another move up. I'm only interested in playing the downside break into demand, the 347.18, or if we could get back above the 363-ish area and hold once we get some confirmations for continuation. So what I liked about this, a couple of things. The Thursday of August 19th, we bounced off demand. We moved up. We also created new demand around 347.18, which can be seen as bullish, especially after breaking a downtrend line to the downside. So right there, we got three bullish factors. Demand, break a downtrend line. Now we wanted to see a retest either into demand or a break above and switch trends above a previous lower high. This also was confluent with a supply zone. So this was last week. We rejected the supply once, we sold off. Next time we came into it, very responsive sellers, we sold off. Following day into it, sold off. So now we have this 360.42 supply zone marked as a key zone that every time we come into it, sellers reject. So put yourself in the perspective. It's very, very key to do this. Put yourself in the perspective of a participant and see where you could trade with them or see where you could trade against them when they're going to be in the most pain. If I'm a seller every time around the 360, 362-ish area, and I'm not getting effort or I'm not showing effort and I'm not getting rewarded to the downside, what's going to happen? The market's not going to move back down. We're either going to balance out, consolidate, or they're going to cover and they're going to cause a rally to the upside. So what I liked about this was we were flagging also at supply, which is also a pretty bullish sign because once we consolidate and don't see a sign from sellers at already an existing imbalance, it's kind of like a red flag if I'm a seller. So what I wanted to see was a break above 363-ish area if we had strong volume and continuation to the upside. So now I'm going to add, let's add this. So now what I'm going to do is I added VWAP and I added volume. As you could tell, when the market breaks out, this is the type of buying pressure and heavy volume that you want to see for continuation if you are playing a breakout, especially playing the opposing zone at supply. What I liked here was we made a move up inside of supply. This was different from every single time we came into supply. Every time we came inside, we rejected or broke out above and failed. What I liked here was we made a move up and we were flagging or consolidating while we were using VWAP as support. It was angled up and volume was very high. Those are your signs that, hey, now we have the context of buyers are interested. Now what we have to do as traders, once our plan triggers, is pinpoint an area that we can enter where the risk to reward makes sense. If we can't find the confirmation signal and we can't find the confirmation signal where the risk to reward makes sense, for me at least, I don't have a valid trade to put on. So if I go to a 1 minute chart, couple things that I want to improve on for this trade. Like I said, it could backfire. I'm not perfect. I make mistakes. What I felt like I did was I entered a little too early. I entered at 9:53 when the chart looked like this. Now this very well can backfire. It also has backfired on me where I chase an extended upside move while the market really isn't too strong. If you look at NQ, yeah, it was strong. But at this point, we were trying to move lower. At the same time, ROKU was showing strength. And if you look at ES was just flat and consolidating. So market conditions really didn't align in my favor. And I was chasing an extended move without a flag, without a pullback, without continuation. It was just a straight move up. And at this point, my stop was below 360. It was kind of a wide stop. I got long once we broke above 364 at 9:53. So about a 4 or so point stop. It was a little wide for my liking. And you have to imagine after an extended 10-point rally to the upside, 11-point rally, the market at some point, for those longs, they're going to have to take profit. And when they take profit, they're going to cause a reaction that the market's going to pull back. And if we truly want to move up, that pullback is going to get defended by those buyers at lower prices, which is why my stop was at 360. So this immediately really didn't work out. We were consolidating, pulling back, moved up. I didn't like how we failed to stay above the high. We broke above it and then moved back down, just like NQ yesterday or on Thursday. My stop was still in place. This, to me, complete chase. I'm not very happy with the execution. Then we started moving up. Volume started building. And then another failed high a day break, moving back down. Now at this point, I moved my stop loss up because the contracts were up about $1.20, I want to say at this point, with the volume coming in. So I had a green trade on me. I wanted to manage it properly and tweak my stop loss just so, because my analysis was correct, I didn't want to make it a red trade on me. It's all about trade management. So at this point, my stop loss was below 362, and it also lined up perfectly with VWAP. We never triggered it. And what I like here was we had very strong 4 green candles to the upside. The next push, I got out my full position. I didn't want to play games with this. I saw volume increasing. These are kind of red flags for me when we break above the high and fail. So I took profits when I did. That's another mistake because I could have gained another, 6 or so points to the upside. I should have maybe boosted my stop loss a little higher, maybe scaled some out, or maybe just put a little more risk on the table and held for a bigger move. But I'll never complain about profits. I'll never complain about following my plan because this could have moved up. I could have sold or I could have not sold and the market could have reversed. So you never know what happens. Instead, you have to react instead of predict. But this could have got, another sick gain on these contracts for another 6 points. And I would have had a really, really good trade on my hands. But the conditions of the market really weren't aligning. And I'm totally cool with it. There'll be a setup tomorrow. There'll be a setup next day. There'll be a setup next week. I have confidence in my edge. I follow my plan. And that's the only thing I could do as a trader. And on Friday, as we prepare for the Labor Day weekend, the market is closed on Monday. There were some good setups on ES and NQ. So this goes into price preceding news, where we had news, the same supply zone from Thursday that we rejected. The market came up in the overnight session, rejected supply, rejected a downtrend line perfectly, sold back off into demand, where we found a bid and rallied from this. The same exact case with the S&P 500, except this was at all-time highs. We did not really have any supply, sold off into demand, then broke low a day, which is a very bullish sign for me, especially at the 4521 demand zone, where we found a bid, but because it's a holiday weekend, volume was extremely dry. As you can see, 900,000 share or lots traded going into end of day, compared to a 1.1 million daily average, which is extremely low. But we are preparing for a holiday weekend, and a lot of traders like taking Friday off, since the market is closed on Monday. Before I end the video, I will say that the prices on the website reflect the course discount for Labor Day. I recently added a voice chat feature to the chat room, and as I continuously add value to the programs, the prices of the courses will increase, and current members always have the added benefits. But I'm going to leave you all on that note. Be sure to drop a like, comment if you have any questions, and be sure to check out the links in the description below because, like I said, I offer a very in-depth course, and they will be discounted for the holiday weekend, and the prices will change starting Monday. But besides that, I'm going to end it. Peace out.